How bad are things there at the moment?
Okay, Hong Kong is much better than last year. It was madness last year. COVID, of course, slowed things down, but otherwise, the society is pretty calm.
Okay, I mean, what about your business itself here? You know, a lot of people are working from home now, a lot of remote offices going on. How is that reshaping the way that you look at the industry itself now and how you lease properties?
Hong Kong commercial properties obviously are hurt. Mainland China is booming. So half of my business, a little over half of my business is fantastic. The other half is struggling in Hong Kong.
Okay, well, Ronnie, you know, with all that in mind, you know, how do you actually veer away from your traditional business, or are you going to concentrate on your core activities that you've had before?
Well, the reality is for the last 20 years, Hang Lung has been concentrating on high-end commercial real estate development on the mainland. We have not bought a piece of land in Hong Kong for a long time. In Hong Kong, we're only positive about the luxury residential sector. The average mass residential is okay, but the commercial, the shops are really hurt. Offices are weak, but I won't say seriously hurt. So we have been concentrating for 20 years on the mainland, and we're fortunate.
Okay, can you give me an example of, you know, your business in mainland China as well? I think you have a luxury mall there. It's Plaza 66 in Shanghai. How's the recovery there post-COVID-19? Generally speaking, we're getting very bullish news from on the ground in the mainland. Are you?
All you need to do is read the reports from the luxury brands. We are seeing exactly the same thing. It's not just Shanghai. It's all over mainland China. As long as we have luxury shopping centers, rents have been growing at double digit, definitely. And the sales of our tenants, some of them, the top brands, are 2-3 times better than the same month last year. Actually, more like 3 times. That's pretty good.
Ronnie, there's some concern in the property market in China. In fact, Beijing has expressed concern that it's looking pretty hot. Is it overheating? And if it is there risk that it could derail China's economic recovery?
Well, Beijing's concern is more on the residential side, obviously, for any government. And the residential side is one thing which we hardly touch. We only do very little, but very high-end luxury residential. But those are all attached to our luxury shopping centers and offices. Both of them are doing well. The offices are good, but I won't say excellent. But the high-end retail is superb.
But the impact of the property sector is far-reaching, Ronnie. I mean, there are concerns about how property developers are leveraged up, taking advantage of monetary easing. What's your take on that? What's the risk that you see?
Well, let's face it, the mainland local residential developers have always been hugely leveraged. It's just a matter of time that some of them will get into trouble. Beijing doesn't seem to, in the past, want any of them to actually blow up and try to help them. But on the other hand, I have always been predicting that sooner or later, Beijing will have to let the market work. And those people who have really over-leveraged themselves seriously, some of them will have to pay a price for it. And it doesn't affect the economy because the real asset is still there. It's just changing of ownership. So, you know, those guys who over-leverage, they ought to pay the price. But it will not hurt the economy that much, except psychologically perhaps. But if properly managed, and it is just same asset, but changing hands, let somebody with better financing handle them, or maybe better capability in development as well. So I think that it is a manageable thing.
With China putting a lid on leveraging of property developers, do you see that perhaps reshaping China's property sector?
Well, I hope so. I think it's a matter of time. Everything evolves, including the market. And if they have to restructure it and overall lower the leverage of the high-end, of the mass residential, that will be a good thing. Obviously, They can borrow money very cheaply in Hong Kong. In the old days, they may be paying 13, 14% on their fixed income instruments. But now, some of them are paying, the same guys are paying, I don't know, 6 to 8%. And so to them, it's a great improvement, and some even lower. So I think that, it's many things, including the financial market, that affects the real estate market. But at the end of the day, anybody who does real estate with a lot of debt is running a huge risk. When the market is rising very quickly, meaning that demand is huge, like in the last many years, it may be okay. But even then, it is, to me, not a sustainable situation.